The new year comes with so many personal finance goals, aspirations, and resolutions. It is imperative, however, to recite those critical personal finance mistakes that we have to avoid for a prosperous financial year. And for those already avoiding these money and finance mistakes, keep it up. In this video, we give you some personal finance money mistakes that you should avoid this year. Number 1. Not making your health priority. Remember, your health is your wealth. With the new pandemic reality, we know that our health is more important than anything. Your goals, aspirations, and financial desires are only attainable if you are in good health and alive. You can only work and do business if you are healthy. Pushing out the much-needed medical checkups or physical is setting yourself up for failure. If you don't feel 100%, seek medical help. Don't let your lack of prioritizing your health endanger your future and your wealth building and give you heavier medical bills later on. Avoid not making your health priority. Number 2. Not making retirement your priority. Not setting enough money aside for retirement. Take this a step forward and make paying yourself almost the same as paying into your retirement. Make seeing your retirement account and your net worth growth something that is fulfilling. Don't be those that only find fulfillment when they buy material things. Material things are what they are, just material things. With working from home reducing our commute expenses, and some insurance company giving discount for not having to drive as much, perhaps now is the time to put some of that extra cash into your retirement. Make sure you max out your retirement. Number 3. Not embracing compounding interest. Try trusting compounding interest this year. Give it a shot. It really works. Let that money make you money and allow that other money to make you money. It is a snowball effect that can quickly help your portfolio and net worth grow. Like Albert Einstein once described compound interest as the eighth wonder of the world, saying, "He who understands it, earns it. He who doesn't, pays for it." Number 4. Avoiding or not investing in real estate. There are several ways to invest in real estate. So many that you have no excuse but to choose one. You can invest through physical real estate, if you have it in you to be a landlord, and can handle contractors, tenants, toilet, and termites. You can invest through crowdfunding platforms if you don't want to be bothered with tenant and all, and just want good return. There are crowdfunding sites like Fundrise or Yield Street. You can invest through REITs. Just buy quality REITs like O Reality or WP Carey or Store Capital and you are done. Get into real estate investing. Number 5. Avoid investment scams. Don't get scammed. If it is too good to be truth, it usually isn't. We've all gotten that emails from scammers pretending to be offering something great. Don't fall for it this year. You don't want to be set back and have your hard-earned money gone. No one can double your money. No one has unclaimed money in your name ready to be dispersed. There's nothing as free lunch. The only thing that can make you money is legitimate businesses, and investment you make yourself with tried and trusted brokerages and platforms. Number 6. Paying the bare minimum on your consumer or credit card debt. We all know paying the bare minimum on that consumer or credit card debt will only make you pay the money back forever. Paying the minimum prevents principal pay down. The minimum only pays the interest on the debt. If you want to pay off that debt, then you have to pay a lot more than the minimum payment. Keep doing this and watch how much goes to the principal. Paying more than the minimum is the only way to get out of a credit card or any consumer debt. Number 7. Gambling. Stop it. Especially if you are not a professional. This year, you want to avoid it completely. We've all heard the saying, no matter what you do, the house always wins. Also, ask yourself, how did you survive during the pandemic when all the slots and gambling arenas was closed? If you can survive those months, you can survive staying away from gambling. And if needed, seek professional help. Want to invest in crypto because everyone is getting rich from it? Make sure you do research and gain some understanding before you invest in crypto. Number 8. Not checking your accounts frequently for fraudulent activities and fees. No matter how rich or successful you are, you must check your accounts at least once a week. Look through briefly and make sure you recognize every debits and credit line items. I was a victim of fraud last year. A check I mailed to a clinic for a copayment was intercepted even though I mailed the check at the mailbox in front of the U.S. Post Office. The check was for $25 and the fraudster intercepted it, edited it, and cashed it as $2,500. I was lucky to catch it within 24 hours because I check all my accounts, especially my operating account, regularly. You don't want to know what I went through with the bank to get my money back 4 months later. Based on this experience, I've since stopped writing check to be mailed. I only write checks to people I physically can hand it to. Please learn from this. As you can see, we have nothing to sell you, but to give you these tips for free. However, we want you to please subscribe and give us a like. We'll give you a moment to like and subscribe. Thank you so kindly. Now let's move on. Number 9. Not monitoring your credit score. You need to watch your credit score and credit report like a hawk. You need to use one of the monitoring services so that they keep you up to date when you have a dip or you have some unauthorized inquiries or errors or a new account opened which you didn't authorize. Most of the credit card these days offer free credit score and credit report monitoring. You can also try Credit Karma or Experian. Whatever you do, don't go months without monitoring your credit score and credit report. The worst thing is to not be credit worthy and credit ready when you need to pull the trigger on a big deal or big purchase. You need to frequently track your credit score and monitor your credit reports. Number 10. Not tracking your net worth. It doesn't have to be 100%, but just track it sometimes to give you an idea. You can use the free services such as Personal Capital. Put in all the account and numbers in there for them to give you an idea of what you are worth after factoring your retirement, other investments, savings, and your debt obligations. It doesn't have to be perfect, but track it so you can know where you stand, give yourself achievable goals and milestones, and work towards something. Number 11. Not paying taxes. This is one of the greatest money mistakes ever that comes in several forms. Not paying taxes or not paying enough. Not filing your taxes properly. Not filing your taxes on time. Not disclosing all incomes. Claiming deductions that you shouldn't. If you do any of these, you need to stop it. No one is going to be on the hot seat, but you when things fall through the roof. You can lawyer up all you want, but when the lawyer gets to the end of the dark tunnel and can't help you anymore, they just say, "This is a good deal, I'll take it if I were you." You don't want this to happen to you. If you don't know how to do your taxes, get a professional. If you don't like your tax guy's style, get someone else. If you see something fishy in your returns, make amends immediately. The rate of IRS audits may be down due to pandemic and labor shortage, but remember that IRS can go back many more years when they find substantial mistakes on the first return they decide to audit. They have a whole department fishing for red flags on taxes. I've been audited before, it is not fun. The emotional trauma cannot be described. Prepare to pay your own fair share of taxes and move on. Remember that fair share you pay is your civic duty as a proud American citizen, and it covers the cost of your protection and the cost of government. The funds keep our great nation, states, and our local municipality running. Number 12. Giving up on that thing you want to do. You want to invest in real estate, just do it. Want to invest in stock market, start small and just do it. Want to earn a degree, just start. Believe it or not, time is going and you are not getting any younger. If you've been doing something you don't love, and you have something you love and desire on your radar, now is the time to do it. I'm very guilty of this, and I'm speaking to you and myself here, and I want to do better this year. Just like the saying, everything you wanted is on the other side of fear. Take that leap of faith this year, but make sure it is a calculated risk. Trust your instincts. Again, I'm guilty of this. I have this one thing I want to do, but I've been delaying it because of fear. You know what that project or endeavor is in your life. It is a money mistake to not take that calculated risk. You want to produce a song, do it. You want to write a book, start writing it. Just like Florence Foster Jenkins said after accomplishing her dream of singing, she said, "People may say I can't sing, but no one can ever say I didn't sing." The takeaway here is: don't give up on your dreams and aspirations. Number 13. Not saving enough or saving too much. You don't save enough, then you don't have money for rainy day and emergencies. You save too much, then your money gets eaten by inflation. You need to find a balance where you have enough for emergencies in the bank in case your income changes or unforeseen emergency happens. Also, you need to not save too much to prevent inflation from eating up your savings. Number 14. Trying to time the market. You are waiting for Apple, Microsoft, Alphabet, and your other favorite stocks to dip so you can go in and buy the dip. Have you heard the saying that time in the market beats timing the market? Timing the market is also buying the securities just so you can sell it at a higher price in the future. Both of these can backfire. Try not to time the market either to buy dips or buying solely to sell high in a short term. You want your strategy to be to buy and hold for a long term, watch the stock appreciate, collect the dividend, and allow the dividend snowball to grow your portfolio over time. Number 15. Not moving on from past financial mistakes. You have to move on. Learn from your past financial mistakes and launch forward in a new direction with powerful lesson learned from last year, last trial, or last lap. Don't beat yourself up on those money mistakes. Learn from it and make even better decisions this year. Number 16. Not setting money aside to invest in yourself. Invest in your financial education. Take some online classes that can help you be better with money and investing. Take some new classes and read books that teaches you about anything finance and money management. Attend professional seminars that can broaden your horizon and in which you can network. Take a class that will help you improve mentally and potentially help you apply for that higher paying dream job. Invest in getting new skills that would give you better return. I hope you learned at least one thing from this video. Do you want to save money this year? And escape the paycheck to paycheck life? Then check out these 2 videos. Thank you so very much for watching. Don't forget to like, share and subscribe. And we hope to see you in the next one.